Hello, this is Kirill from forexboat.com and welcome back to the course on testing and optimization in MetaTrader 4. Today we're going to talk about rolling optimization and how it can benefit your algorithmic trading. Let's look at a scenario. For example, you've completed all your optimizations, back tests and forward tests, and you're ready to launch your demo tests. And then you're running them, and assuming that you're happy with the results, you launch real tests with a small account just to see how your expert advisor performs in real market conditions. Assuming you're happy with that, you launch a large-scale real account with the same set, and at the start everything is going well. You're very happy with the results. Your account balance is increasing, but unfortunately, as we know, nothing lasts forever in this world, and at some point that happiness is going to come to an end because your expert advisor is going to stop performing as well. And let's pause for a second to understand why that can happen. This can be the case for many reasons. For example, the market may have changed, or the market just entered a different cycle. For example, flat cycle and your expert advisor stopped making profits, or there can be seasonality effects. For example, if you're trading a currency that is somehow linked to a certain commodity which is seasonal, then that can affect your trading. There are many factors out there that can prevent or change the circumstances in which your expert advisor is trading, and therefore lead it to start incurring losses. So at this stage, this is when everything turns around and all your profits can diminish very quickly. So we want to preempt that moment. We want to somehow protect ourselves from this happening. And so let's do exactly that. Let's rewind a bit and go back to the day when you launch your large-scale real account. Now, you don't know when in the future this can occur. Like, it can happen in a month, it can happen in 5 months, it can happen in a year, when this turnaround will occur, or maybe even your expert advisor won't start making losses, but it will start underperforming. It won't be performing as well. It will be making less profits. So that's something also to look out for, because a lot of traders will think that since an expert advisor is still making profits, that's good. But if it's not performing as well as you expected it to, that actually means that something is going wrong, and you have to look out for that as well. So you don't know when in the future that will happen, but you know that most likely it will occur at some point. So what the best thing to do, and what rolling optimization implies, is planning in advance a period of time after which you will re-optimize your expert advisor. So after the timeline goes past the second faded green across, what you will do, or X mark, what you will do is you will run another optimization of your expert advisor, or you'll run a precise optimization of the parameters you have, run a few back tests and see how everything is going, and see if you can actually improve the results that are being shown by your expert advisor. And so when you get to that point in time, the second green X on the timeline, if you run your optimizations and forward tests again, you may uncover that if you adjust the set of your expert advisor that you're currently using, then you can improve the results, or you can filter out additional losses that had been incurred in the previous couple of months, or you can somehow upgrade the performance of your expert advisor. So if you do uncover that in that scheduled period, then you just adjust your set, and that way you can avoid that loss on your account that we were talking about previously, and that change in the behavior of your expert advisor. So why is it called rolling optimization? Well, because throughout the process of your algorithmic trading, you don't just set your expert advisor and let it run until the end of time. No, you have to schedule and actually run these optimizations and forward tests throughout the life cycle of your trading system. The way you schedule them it entirely depends on the system. Think of it in terms of, and this is the way I usually do it, think of it in terms of cost-benefit analysis. Like, how much money is this expert advisor bringing you? If it's a scalper, it can be bringing you, thousands of dollars per day. Then it it is worth your while and worth your time to, at the end of every day, to sit down and re-optimize your expert advisor and evaluate its performance for the day and see if you can upgrade its set somehow. If it's a hourly expert advisor and it's bringing you only maybe $50 a day, then what is it going to be worth your while to spend that extra 2 hours of your time to re-optimize? Maybe say $50 a day on average, and then in 4 weeks, in about a month, you're going to get $1,000. So maybe it's worth your while to spend 2 hours a month to re-optimize this. In any case, that is the approach I use, and maybe that's something you would want to consider in terms of scheduling these optimizations and forward tests. But certainly these they are something that has to be done throughout the life cycle of your trading strategy, and also that will help you identify the moment when your expert advisor has passed its due date, because a lot of the systems out there, they only work for a certain number of months or years, and that's the reality of things. Very rarely you will get a system that, even through optimization, constant re-optimization, you will be able to maintain for a long time. Sometimes systems, or often systems, only work for a year, even through with these optimizations forward tests, and then you will see that the performance is deteriorating regardless of how you're optimizing it. That just means that that inefficiency in the market that you were exploiting has been uncovered by many more other traders, and it's time to move on. It's time to get a new system. It's time to do all those optimizations. The only goal that we're chasing is that the profits that you make while the system is working, that you're able to keep them and multiply them, and then move on to the next system with those profits. So that's in a nutshell rolling optimization. I trust that you will take this into account and use this in your own trading strategies. It's a very useful method that can really protect your investments and returns that you've already made. Thank you very much. I look forward to seeing you next time. Until then, happy trading.